Hi guys, this is Ray from nextforextrade.com. Today is the 14th of August 2019. It's a Wednesday and it's just about 1:30 p.m. In the UK. So just going to kick off with two trades that I have open at the moment, and this is going to be an interesting discussion because I often say avoid being in more than one position at the same time, and because there can be instances of the currencies moving in the same direction, so what's called positive correlation or negative correlation, where they move in opposite directions. In this instance, we've got two pairs that I'm in, the AUD USD and the GBP NZD, and currently these are negatively correlated. So as one moves one way, the other moves the other, and I've got two shorts on these. So effectively what's that saying is it's kind of like almost a net position, because if I'm short on both of them and they move in different directions, as one moves up and the other moves down, it just means that roughly my position is not moving, if you like. I'm not making much, I'm not losing much. Now I'm perfectly fine with that in this instance, because I'm looking at different things on the charts in both instances. But if you do trade and you're new to trading, you're not aware of currency correlation or negative correlation, positive correlation, that's just something to bear in mind, because you may be taking more than one position at a time, and you can be just end up kind of moving in place, if you like. You're either increasing your risk unnecessarily by taking lots of different currencies at the same time, or you're not really doing anything with your position, because the currencies move in similar ways. So just bear that in mind. Like I said, I'm comfortable doing this because I'm just aware of what could go wrong, what could go right. But yeah, if you're new to trading, just I would say focus on one currency at a time. And that's not just, when I say one currency, don't just look, say, at the AUD USD. I mean, be in just one position at a time. So let's just have a look at this setup. So from yesterday, I did enter a short on this, and this is still looking okay based on what we're seeing on the daily. We did have this extension move down here. There was there was a resistance where our stop loss is above. We can see that on the 4 hourly as well. It's kind of double topped as well, come round and moved away. So I'm looking for take profits on this, at least on a 1-to-1 around these areas, because I'm going to let the lower time frame dictate how I manage this trade, because what I'm looking for on these lower time frames is for the price to start moving down with lower lows and lower highs. So I could arbitrarily go for this take profit that I have here, but like I said, a smarter way to play this and really milk the profit out of this is to use the price structure to dictate how I exit. So in a downtrend or downward movement, we're anticipating that it's going to be lower lows and lower highs. So with each lower high that occurs, that gives a reference point for the stop loss. So as we start to see this move down in this kind of like a inverted tick shape, if that does happen, then those lower highs mean I can put my stop loss above each of those lower highs and use that as a means to get out of the market, rather than having an arbitrary 1-to-1 reward to risk. Excuse me. Doing it that way means that the market's telling me when to get out of the trade, rather than me deciding when. So it just depends on how this lower time frame price action materializes as to how I will trade that. So the other one we've got is the GBP NZD. So this is so this obviously on the daily we've got our bearishness that we were seeing here. Let me just zoom out a little bit to see. So at the moment it's in a bit of limbo. This is good, the fact that we've seen this bearishness, lower lows, lower highs. It's interacting with our standard deviation channel, so it's overbought. And the 4 hourly as well. This is kind of in limbo at the moment, because it's good that these highs here haven't gone much higher than the standard deviation channel, right? So this move, this move here, this move here is the same as this move here. So it's good that we're seeing the price finding it hard to move past these highs on the 4 hourly, which also, if we put just a line across here, we can see these highs here. It was previous lows around here as well, so there was support and resistance here as well, that's turned into resistance here off of this standard deviation area. So it's good that it's finding trouble moving higher than that, especially if we've got our stop loss nicely out of the way there as well, giving us room to maneuver. If those highs do get broken, we can potentially move our stop to break even. What's not so great about this, and why it is in limbo at the moment, is this retrace that we saw based on the daily. On the 4 hourly, it moves in this channel here, and it's still kind of tucked very neatly inside of this standard deviation channel. It's currently interacting with the average, so this middle line here, which is also kind of intersecting with this upper standard deviation channel as well, but this candle hasn't finished closing yet. So what I would like to see in the coming hours is for the candle to ideally finish something like it is now, not move much higher, and start to move past the low, and most importantly start breaking these lows as well. And we would see on the lower time frame what that would translate to is, say on the hourly, these highs would start to get lower and these lows would start to get lower as well. So the price action would start to give us clearer signs of bearishness. It's already started to happen on the 5 minute here, for example, but we need to see it on the upper time frames as well. So I'm just letting again the price action dictate how I manage this trade. If this does start to break these lows here or even here and start to cycle down, the potential on this one is a lot bigger in terms of the potential profit, because what I'm looking at is this price structure here. I mean, even approaching these previous lows, that's about 2 to 1 reward to risk. In fact, this is my take profit that I've got here that I'm dragging up. So even approaching the previous low, so this level here, this would be a 2 to 1 trade in terms of reward to risk. In terms of how far this could move down, sometimes I use a fib extension. I'll explain this in another video, but basically this 23, what I'm doing is taking this this move here and extending it to the 23.6 extension. So typically that's a typical level where the price will find support. We can see it if we take this one here. So in this move here, of course we wouldn't have had hindsight to see all this price movement here, but for example, if I were in this and seeing this as a downtrend from this point to here, and we'd seen this movement start to happen, then the way I'd be projecting potential profit would be using 23 extension So it would be here. So without knowing all this, go away. Without knowing all that, right, in this extension here, only seeing that and start to break past the previous low, what you typically find is that the price will extend to the 23.6 extension and then move back. And so from the next clear point for it to extend to, for me, is this level here, which means that our take profits could be as far down as here. So that would be 3.5 to 1. But I'm potentially looking to scale into this, so add to the position. But there's a lot that needs to be overcome. It's basically this problem area here. Same thing that we were looking at on the 4-hourly. Needs to break out of this trend. Needs to break out of this support that it's been finding and make definitive lower lows. So yeah, those are the two positions. Probably gonna take the today, tomorrow, so viably to the end of the week, just based on how big these bars are and how these are moving. So maybe out by the end of today if I get stopped out on any of these or decide to take position out early. But if they do run, then it will probably be the end of this week or early. We'll see how it goes. Again, it's just really waiting on the lower time frames to tell me what to do, if you like. So let's have a look over some of the other things in the market. Excuse the sniffles. It's been feeling very ill lately, so I apologise for that. So looking over the dailies here for opportunities, looking for price to be here. This is kind of tradable. It's not great. We've got some reference points. So in this one here, we've got clear downtrend, lower lows, lower highs, standard deviation around the price, and the price is coming back to the average on the standard deviation. And we've got this lower high here. So you could, if you wanted to trade this, our reference point is this lower high. Let's just see how strong that is actually. I think I've done this yesterday. In the same way. So my hesitation on this is that the price hasn't come all the way up to the upper edge of the standard deviation channel, which would be better. And it would be better as well if it was interacting with a clearer resistance level. So say, for example, these previous highs here, if the price had produced its lower high and interacted up there, but it hasn't. It's kind of floating here around the average, which is still okay. I say that because as well, what the 4-hourly is doing is still within our standard deviation channel, so that fits nicely into considering a down a bearish move. These lower time frames aren't great. Let's see. Not a trade that I would personally take, but one way that you could structure this is consider, I mean, if I were to do this, it would be 0.5%. So it's not the greatest of positions, but it's still viable. So stop loss above this previous high here, which is here and here. This will put your stop loss outside of the standard deviation channel, above what we're assuming is a lower high. and on a 1-to-1 reward to risk, it would put the profit target roughly at these type of levels here. So where this red line is, which is before the average of our standard deviation. It's a bit of a punt, and it's not the type of trade I would take. But yeah, it's a medium risk type position. So yeah, stop loss above these highs, 1-to-1, taking out money here, or you could go for the stretch and take profits out a bit further down. So these type of levels around the average, maybe in a 2-to-1, because we've got quite a tight stop. It just doesn't leave much room for maneuver if the price does start to reverse and take out previous low highs. But yeah, it's tradable, just not the greatest of trades, slightly riskier than I'd prefer. This is too oversold. Oh, missed one there. No, that's a no. So I'm looking at daily here always. Already discussed this one. No. No. Definitely bearish. Just the price action isn't great on our lower time frames. Let's see how this. I mean, I can see lower highs here. The price is, it's moving outside of one standard deviation here. It's about, maybe 2, but it's still bearish. These time frames aren't great in supporting that because it's just very rangy. But it's just because in the daily, the reason these are so rangy, so sideways, if you like, is because if you look at the price structure on a daily, it's clearly making lower lows and lower highs, but it's just each kind of phase, if you like, is very sideways in its movement. So this would probably have more context on a much higher time frame, like the weekly or the monthly. If we see, it's clearer kind of lower highs and lower lows there, even the monthly is probably going to be yeah, this has the most context, I would say, on the weekly and the daily. And then, so, for a longer term type move, maybe. But it's not a time frame that I trade, because holding that position, what are the swaps on these? I'm just going to have a look at the swaps. Yeah, so the swaps, problem with holding a position over a long period of times on the Forex is oftentimes you have to pay the swap. So the swap isn't too bad on this, but just looking at the way this is very rangy and sideways, I know that to make the distance or the movement to really take some money out of the market, even on a 1-to-1, it's probably going to take a long time. And swaps are going to be eating into that, and that money could be used somewhere else, in somewhere where the return is going to be a lot quicker in terms of the return. So you're just using up capital unnecessarily. So for no on that one, no on this one. No on this one. No. 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 Oh, euro. Yeah. Same thing I'm saying, really, since the last few weeks. This has just been very choppy. It's struggled to break this area, this support we're seeing here. It's overall bearish. I would anticipate if the price does break that, it's going to be quite a harsh break, and we'll see the price move to test these types of lows and beyond. but it's just conjecture really until we see it break these. So it's really break these, pull back. It's kind of started to do it on the hourly in terms of seeing some relevant price action, but it's just a wait and see. No, 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 no. Already in that. No, 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 no. Too late on that. That would have been. Would have seen an entry on this. No, I wouldn't have seen an entry. Maybe based on a 4 hourly, but this is too late anyway. This was what's this, USD CAD. This was finding some nice price action up here. Nice candle off of the lower standard deviation channel. Price action was okay on the lower time frames, showing lower higher lows and higher highs, but it's just too late to jump on this now because it's just overextended. You'd be paying too much for this, in my opinion. It's just moved too far off. So no, 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 no. Okay, yeah, that's it for today. What I will do is update you tomorrow on how things went with these trades and look over for any other opportunities that might be in the market. Thanks for listening. Bye.